Welcome everyone. In this video, I'm going to be breaking down my best tips and tricks on how to make sure you pass prop firm challenges in 2024. This is a big thing for traders in order for us to change our lives. It's an amazing opportunity. I have done a video on this before, I think maybe half a year ago, and it did fairly well. And people have been requesting if I would do an updated version, see if my opinions on certain things have changed. The approach did say the same, but I do have some pieces of advice that I do think are worth sharing in regards to how to go about these things. In this video, hopefully I shine light on some of those in a great way and you take some value away from this. So without further ado, let's jump into the first point. So the first thing to do with prop firms in 2024 is make sure you are picking a legit prop firm. Make sure you're picking a prop firm that has been reviewed many times. You can go on YouTube as well and look up people getting paid out by these prop firms. Once you see that prop firms have been paying people out for a consistent basis, that can be your key to look into them, right? That can be your key to take the challenge and go for the prop firm account. For me, I'm with FTMO, Funded Engineer. There are others that I will be going for as well, but those two so far I've been absolutely loving. The customer support is very good. They have great reviews. The spreads are good. No slippage, nothing that we were dealing with MFF or anything like that. So I currently have about 7 figures in funding in challenges right now that I'm going for at the same time with a trade copier. They're all in profit. They're all going great. So when I do pass these, I will have over 7 figures in funding, which is great. So I will update you on that. It should be happening early into the new year if all goes well. So the 2 firms that I am going for are FTMO, which I'm already funded with, and then Funded Engineer as well. So find a prop firm that you did a lot of research on, and then you've seen the payouts and all that good stuff, and then go from there. There are others, like I said earlier, that I will be going into, but I want to try them out first before I talk about them whatsoever. The second thing I want you to do is audit your circumstances. Now, this is something I didn't touch on in the last video, but I was reflecting before I filmed this video and I thought this would be a perfect thing to throw in there. What I mean by audit your circumstance is you have to be honest with yourself on your financial situation. For example, myself, when I first started going for funding challenges a couple years ago, I was in a much different spot. I only had been trading smaller personal capital. I had money saved up from when I went full time, and I couldn't afford to fail these challenges. I couldn't go into these challenges and trying to rush past them. And I was very careful with my risk. I was barely risking anything. So it took me months to pass these challenges because I just continued to get free redo after free redo, always struggling to reach the final target. That's when I started to increase my risk once I had a buffer, like I talked about in my last video. If you haven't seen that video, I'll link it in the description. But once I was up a couple percent, then I upped my risk and it made passing a lot easier. But that's besides the point. I couldn't afford to fail these challenges, so I was very careful with my risk, and I didn't want to go out and lose that money right away because I couldn't afford to. So if you're in that situation, you can sit there and leave your ego at the door here and think, listen, how much money do I have for these challenges? If this is your whole month's paycheck on a challenge, then obviously you are going to go about it in a much more careful way, rather than if you have money, if you have cash liquid, you have other sources of income that can supplement that and pay for the challenges at a faster, quicker rate, then you could obviously risk more, and I'll be touching more on that soon. So for the situation that I'm in now, I talked about my previous situation. If you're someone who can't afford to fail them, then yes, play passive. But if you're in a situation like myself now, the version of me now can afford to fail challenges, and the version of me now actually looks at time rather than money, right? So what I mean by that is I risk 2% per trade on challenges now because I'm either going to pass it faster or I'm going to lose it faster. But regardless, the process is going to be done faster because I can't spend months on end going for a funded challenge, because that is time that I could be getting payouts from these firms, right? So for me, I risk 2% per trade right off the bat. Even if I'm in drawdown, I do take a little bit riskier approach because, again, I can afford to lose the money, whereas I couldn't years ago. So you have to make sure it's not one size fits all. There's too many people that say, you have to risk this, you have to risk this, with just a blanket statement that everyone is the same financial situation, when that just isn't the truth. And take the advice from me, because I used to be over here and now I'm over here, and this way works and so does this way. But obviously, if you can't afford to lose the money, you're not going to be risking 2%. That is going to be extremely tough on your psychology. And believe me, I tried that. I tried that before and it doesn't work. Now I'm in the situation that I can. It's a lot easier, but I'm going to touch on something in the next point or the next couple points that's going to make a lot more sense. So now once you've audited your circumstances and you know if you're going to be either passive or you're in the circumstance to be a little bit more aggressive, we're going to jump into the approach. So with the approach, if you're like myself in the first circumstance, what I'm going to suggest you to do to pass these challenges every single time is start off with low risk. So what I would love you to do is start off with 0.5 risk up until you are at about 4% profit. So if you're risking half, that means you have to lose 20 trades in a row. If you are a consistent trader, like you should be before you go for these challenges, there's no chance you're losing 20 trades in a row. So once you have that buffer of 4%, then I want you to increase risk to 1 or 2%. This will make reaching that final target a lot easier, especially on the phase one, because these prop firms, the phase one is the highest, obviously. So you need 8 or 10%. There's some even lower, but the first phase, you have to get the highest target. So once you have that buffer and you're playing with that host money, like I've talked about before, you can then increase risk, which means you don't even need a big trade to win and take you over the line. It's a lot easier. And this approach worked very, very well for me once I figured it out when I was in that passive state. If you're like myself now and you can afford to lose the challenge quick or not, then I would suggest risking 2% per trade no matter what, if you're in drawdown, if you're in above, because the process is expedited. You either win quicker or you lose quicker. And trading is all about probabilities, right? So yes, there's a chance that you could lose 4 trades in a row and blow that account. But the odds of you buying another challenge and losing 4 trades again are very slim. Most likely you're going to pass that next challenge. So figure out what one you're in and then base your approach off of that. You have the passive approach, like I just talked about, where half risk up until 4 and then increase risk, or the risk approach where you're risking 2% per trade. This has helped me immensely. A lot of my friends that are multiple 7 figures in funding started out on this side, the passive one like I did, and now they're more on this one. And it's because we value time more, right? We don't want to be doing these challenges for months on end and getting nothing from them. Now let's jump into the 5th point, which is the setup. You may be asking me, okay, well, are you just going to try and gamble your way to a pass? That's not what I mean whatsoever. What I mean is your setup is still going to be your A+ setup. And where people go wrong with these challenges is they start to just gamble their way there. They deviate away from their trading plan, and it's like a whole new thing. You're in that challenge. You're not trading the way you were before. That brought you that consistency. You're not taking trades to plan, and you're just trying to wing it to get that target. And I don't think that is the proper way to do it. Use your current strategy that has gotten you to this point. Use your current strategy that you have back tested many times, you have data on, you have your trading plan, and you know it's a consistent strategy. Then what I want you to do is wait for the best A+ setup there is and just size up on that position, because then nothing is changing. You're not changing anything. You're taking the exact same trades that you normally would, but you're just waiting for that absolute best one that checks all boxes, and then you risk accordingly. You size up on that trade, so you don't need a lot of trades to pass them because you are risking more on those high quality setups. People get this wrong, and I see it time and time again. They trade a certain way to pass the challenge, and then when they have the funded account, they're still in that bad habit of taking trades that aren't to their plan, and then they end up burning that account that they work so hard for. The next thing I want you to do is take it off of a pedestal. I can't remember if I talked about this in the last funded trading video, but I need to touch on this one more time. When I first passed my first funded account, after months and months of putting on a pedestal, I thought when I passed this funded account that I was going to wake up in the morning and literally be able to fly and breathe underwater. I thought I was going to be a superhero because I had put it on such a high pedestal that when I did achieve it, let me tell you, it was just another account. I woke up the exact same way I woke up all the other days and was a trader. Nothing changed except I had a login. And yes, you're making profits on this account now, but at the end of the day, your job remains the same. You stick to your trading plan. You continue to do everything you need to do on a daily basis, just like you were before. So it's not going to make you happier if you think it is. And by removing it on a pedestal, it's a lot easier to take the challenges because you don't care about the result because you're just focusing on what you have to do each and every day. Take it from me, I've talked to many other traders as well, and they said once they reach that funded account, they had that, what do I do now? And it's similar to, I'm not going to relate it to the Olympics, but there's studies that most Olympic gold medalists, about a week or two after they've achieved the gold medal, they're super depressed. And it's because they achieved that goal that they set out for it to be the best thing on earth. But then once they got that original dopamine hit and it was over with, that was it. And you go for another thing. As humans, there's always going to be another mountain to climb. And that's why with these funded accounts, once you get one, use that feeling of emptiness after you achieve that to go for the next one, because acquiring these funded accounts and stacking them is how we change our lives. It's getting 7 figures in funding and only risking a couple % per month to make extraordinary gains. So take it off a pedestal. I promise you it's only going to help you. You're not going to be as stressed when you trade because it's just another deal. It's just another challenge. And when you do have the account, you're going to just keep yourself in that neutral state of mind. Lastly, I just want to quickly touch on what funded accounts have taught me heading into 2024. The biggest thing that I took away is small percentages each month yield big results. So for example, you win your first trade, wait for that payout. You win a couple trades, wait for that payout. Don't try and burn it. Don't try and get that 10, 20% target like you see all these social media gurus say you have to do to be a great trader. When I was starting out this journey, I was tricked on Instagram that 10 to 20 to 30% per month was sustainable every single month. And it took me having a large account to realize that 2% per month, 3%, 4% is life-changing stuff. And doing that on a consistent basis is how you just continue to live an amazing life. You need to remember this because we have to make a change here as traders in this community on this YouTube space. We have to normalize legitimacy. And that is small gains per month consistently yield big results. Don't get tricked for all this stuff, the 20, 30, 40% months, because there used to be a point in my trading journey, guys, where I thought anything under than a 10R trade was trash. So just remember, small gains every single month yield big results. It's similar to like what I say at the end of every single video, being 1% better every single day, getting 1% better in the markets every single week, winning that 1% trade, 2%, 3% trade. It takes you a long way. So I hope you guys enjoyed this video. I hope you guys took a lot away from this. I haven't done a sit down video in a bit, so I figured I would do one. I appreciate you all so much. I hope you guys are having an amazing holidays. I can't wait for what 2024 is going to bring us. I appreciate you all. And what do I say at the end of every single video? Let's be 1% better every single day. Please do me a favor and drop a like on this video if you did enjoy and you stayed to the end. And quickly, I just wanted to let you know we are doing $240 off the RM Trading Mentorship. We won't have a sale like this again for a long, long time. So check out the link in the description, check out the website and see if there's anything there you enjoy. And I will see you guys in the next video.